Stick with these bank earnings. We are joined by Laura Lau, Chief Investment Officer at Brompton Group. Great to see you. I know you haven't had that long to check out the BMO results, for example, but anything jump out for you, Laura?
I think that BMO, it really was a clear beat across the board. So that's good because what was very concerning about BMO is they would give guidance over credit losses, and then they had said, oh, it should be fine, and then they weren't. So that's why in December they said, oh, it should be peak credit. The market got excited, but not too excited. So now they're happy to see it in print that the credit losses really are manageable. They peaked, and that, I think, makes everybody have a sigh of relief and feel better. Especially since they bought Bank of the West, it felt like they didn't quite have a handle on what they bought.
The big the acquisition in the United States that went through a few years ago, and I think there were disappointing credit losses at Bank of the West.
Yes. So the other thing is BMO, now that TD cannot grow their U.S. business, if you want U.S. exposure, you buy BMO.
There you have it, quite the move in Bank of Montreal. It is still down, though, of course, from its 2022 level. And that's interesting. Yeah, you argue that you can play U.S. commercial banking by buying BMO here. What about Scotiabank? Were you impressed by that quarter?
So Scotia is been the cheapest bank. It's been the big underperformer this year, and partly because of the tariffs over Mexico. So it's not as clean of a beat for Scotia. So what is more concerning is that the loan losses were higher than expected. So that's why I said it's not as clean, but what we've seen for both these banks is capital markets is very strong, so we expect a capital markets beat across all of the big six banks. So that is also good. But the market doesn't tend to give you as much credit for capital markets because it does tend to go up and down. But the other thing about Scotia is Scotia, they are more subject to net interest income. What we mean by that is basically, the difference between what you lend and what you basically the deposits cost. So for them, they're very levered to the Bank of Canada decreasing interest rates. Because with that going down, it means that their cost of deposits go down. So we've seen that Scotia has benefit from that, and we do expect the Bank of Canada to decrease interest rates still going forward, and that will benefit Scotia the most.
And maybe we could put up a chart for the Canadian 10-year bond yield. When longer-term interest rates go up, though, is that generally good for a bank? That's good for a bank's net interest margin, presumably, because they borrow short and lend long.
Yes, but it's actually much better for the life insurance companies than it is for the banks. So if you actually think that the Canadian interest rates are going up on a long-term basis, you actually prefer the life cos over the banks.
That's interesting, yeah. So you think in particular Sun Life beginning to show outperformance versus the banks?
Actually, Sun Life has been very weak.
Oh.
They had the worst.
Oh, except Sun Life. I'm sorry.
Except Sun Life.
Sorry.
Sun Life had if you go through the Life Co earnings, they've all been, pretty spectacular, except for Sun Life across the board. So I'd say right now, all the life cos are doing well except for Sun Life.
What's the problem at Sun Life?
Well, kind of across the board, it had a lot of issues, whether it be, growth and life insurance policies, just across the board, they stumbled, which is unusual for Sun Life.
Okay. What do you think about TFI International abruptly reversing that move to the United States? Didn't seem very patriotic in the current environment, for one thing.
Well, I'm actually surprised they didn't consult with their biggest shareholder first before going through with this plan. So that was, a little curious, because typically that's what you would do. From a top level, it seemed to make sense because 70% of their revenues are U.S. focused. So I think, and we're starting to see the U.S. taxes are also, lower than Canada. So on the surface, it made sense. But as I said, typically when you do a big move like this, you do talk to your biggest shareholder. The other thing is it would get kicked out of the Canadian indices, and it's kind of small. It's, like under 7 billion US, and it's number 4 in the less than truckload market. So I think that a lot of the Americans would overlook it. So from that perspective, I'm not sure it really would have helped them from a capital markets perspective.
Now, I think some fund companies own a bigger stake in TFI, but certainly Caisse de Dépôt is significant at 4.1%. Alain Bedard, according to my Bloomberg data, is at almost 6%. Yeah, it did seem a bit tone deaf. You think, because of course Quebec always sensitive about losing head offices.
Definitely. So that's why I was surprised they didn't approach them first, get them to sign a non-disclosure agreement before, going forward with that plan. There
are fears about the U.S. economy. We saw a drop in retail sales, for example. Do you think that's likely to play out in weaker returns from stocks?
So what we're seeing is the U.S. market is not cheap. It is, and now if we have a growth scare like that, then certainly we could see, a drawdown in the market. So what we've seen now is a lot of the funds have flown into Europe.
Yeah.
Because Europe is much, much cheaper, and now they're getting more optimistic that the Ukraine war is coming to an end, and that would definitely help sentiment over Europe.
Laura, thank you very much indeed. Laura Lau is Chief Investment Officer at Brompton Group. Always great to hear from you, Laura.